We've been listening to President Trump as he prepares to sign the Phase 1 trade deal. I don't think he's actually done it yet. He's been thanking everyone in the room. And there are a lot of people in the room, apparently. But he hasn't signed it quite yet. Liu He, who is the representative from China who's there in the room, has been waiting very patiently for it to be signed. We've got our panel who is still with us as we've been watching all of this. That's Akiko Fujita and Emily McCormick from Yahoo Finance, as well as Yusuf Al-Abbasi joining us from INTL FC Stone. So a lot of folks here. Also joining us, John Quelch, University of Miami Herbert Business School Dean, who has also been monitoring this situation. As I mentioned, thank you for joining us, John. We have been waiting for the president to sign this. He has been obviously taking a victory lap on this. Is this a victory?
As far as I'm concerned, I think it's a good first step. It's a truce. It's very important that the most important bilateral trading relationship in the world be stabilized. That has clearly happened today. But let's not lose sight of the fact that there is still $380 billion worth of goods and services of trade between China and the U.S. that are carrying tariffs. But I do think the president might take some credit for having at least brought the Chinese to a point where some of those intractable issues like IP, as he mentioned, are now being wrestled with hard, and where there is documentation around practices that the Chinese will be asked to follow, and there are compliance and enforcement procedures in the agreement that should hold the Chinese to greater account than previously. But this is clearly a first step. There is a long way to go in terms of achieving everything that the Chinese wish to achieve, the U.S. side wish to achieve.
John, the president's just said that the Chinese have agreed to buy over the next 2 years $200 billion worth of goods. We've heard figures regarding agriculture being $40 to $50 billion worth of goods. What do you think is the next step, and how quickly do you think this administration can deliver Phase 2? Do you trust that they can?
I believe that the U.S. Trade Representative Bob Lighthizer and his team have done an excellent job and have earned the trust, and likewise the Chinese side. I believe that they will go into further negotiations pretty quickly, but I also think that the president at this point does not necessarily need a Phase 2 deal before November. He has the USMCA, he has this Phase 1 deal, and I think he can stand firm if he wishes before the Phase 2 deal is completed, and hopefully negotiate, as far as the U.S. is concerned, an even stronger set of measures to deal with some of the intractable issues around subsidies for state-owned enterprises, further protections on IP, and a level playing field in areas like financial services and other areas of foreign direct investment.
John, from the Chinese perspective, how fragile is this truce? You know, at any moment, even after having signed this, the U.S. could come after China on the issue of Huawei, on the issue of Xinjiang. There's certainly a lot of issues that could still arise where the Chinese say, you know what, we're done. We're not going to purchase anymore. How fragile is this deal, you think?
Well, I think to be frank, the president took a gamble that the Chinese economy was weakening and the U.S. economy was strengthening. And he saw a moment of opportunity to force the Chinese to get to the table and talk about those issues that previously they'd always managed to slip away from being nailed down on. And so I think he really deserves credit there for timing the intervention. It is a temporary truce. It is inevitable that there is going to be a range of issues that are political and economic that every day of the week enter into the equation around this very important international relationship on which the whole on which the whole global economy depends. But I do think that today is a good day for the president. I think it's a good day for China as well to have this relationship stabilized is good for consumer confidence and corporate investment in China. And obviously the markets are moving accordingly. What could go wrong? What could go wrong would be that the compliance on the Chinese side with the elements of the agreement that they've signed up for in terms of IP protections, etc., that compliance is not satisfactory. And there are processes in the documentation that allow for complaints to be filed, for 90-day settlements to be pursued. But if the Chinese side does not fulfill what the U.S. side perceives to be what it's signed up for, then the deal could start unraveling.
John Quelch, University of Miami Herbert Business School Dean, thank you so much for joining us and for your perspective. I want to keep talking about this because obviously the president's still going, no signing yet. Yusuf, that was a very sanguine view of what we have seen unfold. The markets have, as he just said, as the dean just said, have also reflected that sanguine view.
I mean,
is it right? Is it the right one?
It's tough to tell, right? We have to see some details here. If you're going to talk to me about $40 billion in ag purchases over the next 2 years, I'm going to say, well, that's just Obama-era level ag purchases from the U.S. by China. So we do have to see some more of the details. I mean, the president, I think, maybe watched one too many award shows on Sunday evening. He is still going, thanking people.
Yeah, there's no orchestra to play him off.
There is no.
Yeah.
Listen, the markets are very happy today.
They are.
What they're saying, and the president said that phase 2 negotiations will start almost immediately.